like to welcome you to Sobel Insights. Sobel Insights is a weekly series we provide some brief information on various topics. Our goal is to keep these sessions to 15 minutes. At this time, we do not offer CPE. If you have any ideas for topics or presenters, please feel free to reach out to me. Our topic today is LIFO, and our presenter is Bob Richardson, Vice President at LIFO Pro. And now most people probably haven't heard of LIFO, last in, first out, since probably a college class, maybe even if they took the exam at best. So let's just talk about why should companies elect LIFO in 2021?
Well, LIFO remains to be the most valuable inventory-related tax savings tool. And in 2021, unprecedented inflation has created once-in-a-lifetime LIFO tax savings opportunities in a wide range of industries. There has been extreme inflation measured across the board so far this year. In particular, metals and metal products, there has been 40% year-to-date inflation. In chemicals and allied products, there's been 21% year-to-date inflation. In rubber and plastic products, there's been 18% year-to-date inflation. I've just named a few, but nearly every type of good and industry is seeing either record high or well above average inflation. And a quick formula for estimating the potential benefit of electing LIFO would be to take the product of a company's prior year-end inventory balance and their year-to-date inflation rate. Once you do that, if you were to multiply it by their combined tax rate, you can develop what the after-tax cash savings would be. So for example, a company with $10 million in inventory, 10% year-to-date inflation and a 40% tax rate would have $1 million in taxable income reduction and a $400,000 tax savings from LIFO. The big question we get a lot is LIFO going away? And my simple answer is no, and the threat of LIFO repeal is minimal. LIFO repeal was excluded from the most recently passed infrastructure bill and is also expected to be excluded from the Build Back Better spending bill. So knowing this, the chances of tax rates increasing and inflation persisting is much higher than the chances of LIFO ever going away. So the timing of when to elect LIFO is key, since the change is treated prospectively. So it's important to elect LIFO in a period such as 2021, when there's record high inflation being measured.
Right, so it comes down to coming out of college, and I'm old, so I'm lucky I remember that far back, but coming out of college, you think, okay, LIFO, traditional last in, first out. It sounds odd that, and we'll talk about, I'm going to ask you about industries later on. It sounds odd that certain industries would be electing it, but it really doesn't relate as much to the industry, although that can have some connection. It relates to inflation and what you see happening with your inventory, and you're creating layers. And this is not a technical session. I know that you can talk with people about the whole techniques and the mechanics of it directly. We're just trying to present the reason why people should be doing it. And the big thing, particularly this year, and I know that you were very anxious to do the session because of the timing of the year end coming up and inflation. It's very important for people to be focusing on this now. Now, you had mentioned the one misconception about it. Are there other misconceptions about LIFO?
There are a number of misconceptions, and the highest on my list is the administrative burden of LIFO will far outweigh the costs, and with the benefits of LIFO being primarily with tax savings, many companies feel that the administrative burden to implement LIFO will far outweigh those tax savings. And for companies using dollar value LIFO who manage their calculations in-house using Excel schedules, LIFO can be very complicated for the following reasons. And we won't get into the details on a technical note, but for one thing, calculating your inflation index can be time intensive, and this can be especially true for manufacturers and companies with many unique goods and product lines. Another aspect of LIFO calculations that can be difficult is the LIFO layer and LIFO reserve calculation. And for one, in any given year, a totally different set of math steps are required to be used to calculate the LIFO layers and a LIFO reserve. And this is because the math steps will be different when there's an increment, or what's also known as an increase in your current versus prior year costs, versus when there's a decrement or a decrease in your current versus prior year costs. Furthermore, companies with multiple LIFO pools, business units, or entities have to then manage multiple LIFO calculations. And with knowing that no one size fits all Excel LIFO template or macro exists to automate the LIFO, the LIFO layer and reserve computations, LIFO really can be difficult. But with that being said, LIFO Pro's mission is to make being on LIFO as simple as possible. So for a company that wants to get on LIFO and utilize LIFO Pro's resources, companies can outsource their calculations to us, maintain the tax savings of LIFO, and avoid all the hassle by letting LIFO Pro do all the work. What we also do is license our software. So companies who license our software can minimize the amount of time and effort required to maintain LIFO calculations in-house. The cost of either solution is nominal compared to the tax savings achieved from LIFO, and is a fraction of the cost of other options or alternatives that you may end up seeking. So as a result, companies can accumulate material long-term tax savings from LIFO with a minimal amount of administrative burden.
Right, and you're not saying here, you're not the tax professional, that that there's never a potential tax impact. You're just deferring the tax impact into who knows when. But it's important that people understand, you know, the tax savings can be significant, and it's not determined until somebody comes in and measures it. And I'm going to talk about, was one of my last questions for you, I'm going to mention about implementing it and what I've dealt with in the past. Now you started mentioning pools and layers, and that's really interesting because I have had experience in this area. I mentioned to you in past about, you know, I had a client that used it for gold, and I've had supermarket clients, auto dealerships. So I've had a variety. Are there any particular industries, and I may have taken some away from you by saying that, but are there any particular areas that are clients, that companies that should be identified as prime LIFO candidates?
Supermarkets are great candidates for LIFO because there is also almost always inflation within their inventories. And that's because they have such a diverse product mix that for grocery and what are considered to be food items, being the most predominant in a supermarket's mix, you have lots of non-food items and such a wide array of food products that, say, deflation in one certain food product category will typically be outweighed by at least some or more inflation in other food or non-food categories. So supermarkets are our biggest client base because of that. But they're just about any industry other than consumer electronics are great LIFO candidates. In terms of implementation, we find that wholesalers and distributors are great LIFO candidates because you don't have the complexity that you may have at a manufacturing firm. But we have lots of clients that are manufacturers, and they represent great LIFO candidates in a lot of respects. And when outsourcing the work to us, what would maybe normally limit a manufacturer from wanting to go on to LIFO because of various stages of productions and the complexities involved with item costing, they're just as good of a candidate as a wholesaler or distributor who only has, the cost of what they're maintaining on hand and what they're selling, and they don't have to deal with differing stages of production. But for this year, we're seeing a lot of companies with metals, with 2021 being such high inflation in metals, be great LIFO candidates. But even if that were not the case, companies who manufacture or carry goods that have metal in them, they're just generally good LIFO candidates. And the same could be said in the chemicals industries, where you've got raw materials such as thermoplastic resins and chemicals that are used, petroleum-based products that are used to make chemicals. And on the long term, they're going to have inflation. There's more volatility in those sort of industries, but they're also the industries that lobbied to Congress way back on the 1930s when there was a lot of inflation occurring then. They were the ones asking Congress for the relief with a method such as LIFO because of the extreme volatility. So there really are so many industries that are prime candidates for LIFO that it's almost easier to just list the ones that aren't prime candidates. And so the one that always comes to mind is the consumer electronics. And so the retailers that are on LIFO, they've gone out of their way to put those goods off of LIFO. So it kind of goes to prove that, you know, with consumer electronics, it's kind of the one really narrow area that isn't a good LIFO candidate. This year, it's going to be what industry are you in? And that's going to determine how much inflation you have, because everything does really have inflation outside of consumer electronics.
It's interesting. I didn't know if hyperinflation, which we're not in, but I didn't know that excessive inflation. You know, last year with the lumber, I remember wire, copper years ago jumped up. I didn't know if you were going to say, nope, if it has that excessive inflation, stay away. But you're still saying, and you can imagine, even if it has that spike, and it may come down or level off, it traditionally has some sort of inflationary aspect going to it. So you mentioned before about Excel schedules, and I said how long ago, I didn't say how long I graduated college, but when I was working on LIFO very actively at one time, we had the 18-column work paper, and we were trying to keep the LIFO layers going on there. And then we had a decrement. It was crazy trying to do it. And even if we put it on Excel, it's tough. It really is. And you know, as accountants, we have to be careful that we remain independent of our clients if we're doing an audit in particular review. But so people should get ready if they're going to consider LIFO. There's probably things that they have to consider doing to implement or easily implement, and bring on probably somebody else to do it, because as I said, I've done it and I don't recommend people doing it internally. What steps should they be considering to easily implement LIFO?
So for companies considering a LIFO election, LIFO Pro makes being on LIFO as pain-free as possible. With our turnkey outsourcing solutions, all aspects of a company's LIFO calculation can be outsourced to LIFO Pro, which includes LIFO Pro requesting the raw data required to complete the LIFO calculation, organizing the documentation to be provided, and completing the inflation index, LIFO layer, reserve calculation, and maintaining all of that documentation within our software and generating a LIFO Pro PDF report package, which includes comprehensive calculation documentation and all amounts required for financial reporting and tax return purposes. So we offer a full range of LIFO services, and it's not just the year-end LIFO calculation. We're talking for companies looking to perform interim LIFO estimates, ad hoc projections. You know, we've got clients that some of them are making monthly estimates. Lots of others, the more predominant way to make interim estimates is to do so on a quarterly basis. So we'll manage that for our clients also. But our services even extend to integrating Section 263A UNICAP costs into the reports, completing LIFO-related accounting method changes, such as a layer history rebasing or a pool combination, pool splits. And even for the companies not on LIFO that are electing, needing to file a Form 970 as required, we will go ahead and prepare that LIFO election IRS form. And we can also do so for companies already on LIFO, prepare Form 3115s for any LIFO related method changes. So
all our tax people just got so excited with the forms that you just mentioned. Meanwhile, I'm sitting there going, oh, they have that high of a number? No, yeah, so you coordinate directly with the accountants too. I know that because we've worked together on these aspects. And what's important for people to know is if you're considering LIFO, and I seriously recommend that any company, anybody listening that has an associated with a company with potential inflationary type of items, that they investigate considering going into LIFO, because this is the year to do it, particularly with the inflation. We're not trying to get political here. But if we're going to have this inflation and there is this tax tool out there, people should be considering it. And I say, and every one of these sessions I do, talk with the professionals about this. They're the ones that do this regularly. I remember going and trying to get the indexes for the different categories. That's when we had to go to the newspapers or to the library to go get the information. But you have that information much more readily available. So I appreciate this information. I know it's really quick and very brief. We didn't even go into the details of LIFO, and that one we can get back to our college course, but we'll talk again in the future, maybe do a full session on LIFO itself. But Bob, I want to thank you for all this information you provided.
Oh, you're very welcome. And we're happy to perform complementary analysis. We're very busy in the process of doing that this year, where I think, like you said, Brad, it's a well-known thought. You're going to the grocery store, people are seeing the changes in prices, that because of that, companies that know they should be looking at LIFO are wondering, well, how do I figure out how this all would work? That we provide complementary analysis where we'll look at what your current year projected tax savings could be, but we'll also go back 20 years and say, well, what was going on between 2002 and this year, and was it good, or were there a lot of red years, meaning a lot of deflation? And in those cases, you're probably not a good LIFO candidate. That you should really look at this from a bigger picture. And we provide complementary analysis to companies considering LIFO elections to make their life a lot easier in trying to make those sort of tough decisions.
Great. I appreciate that, and want to thank everybody for attending and look forward to seeing everybody soon.